Hey friends, today we're going to talk about something that is unique to Denmark, how we taxed unrealized gains. It's wild, but Denmark is the only country in the world that systematically taxes unrealized gains on investments. And it's not just a little bit, we're talking about taxes of up to 42% on money you haven't even made yet. In this video, I'll explain what unrealized gains are, why Denmark taxes them, and what it means for you if you live in Denmark. If you're new here, my name is Mario, and on this channel I help expats living in Denmark to save money, invest, and live an overall great life. First, I want to tell you what unrealized gains are. So, unrealized gains are increases in the value of your investments that you haven't sold yet. For example, if you buy today 100 shares of Apple at, let's say, $100, $150 each, so you buy a portfolio of $15,000, and the price of the shares, each share goes up to 200, now your investment is worth $20,000. But this $5,000 in gain, it's unrealized in the sense that you haven't sold yet, and until you sell, basically this money is paper money, it's funny money. In most countries, you only pay taxes when you sell, so when you actually realize the gain. Makes sense, right? So you pay only when, for example, in the Apple example, if you have $20,000 of investment in Apple and you started with 15, you sold and you only paid taxes on this 5,000 gain. But Denmark says like nej tak to that logic. Denmark has a unique system where for many types of investments, not all of them, but for many investments, you pay taxes on the gains whether you sold the investment or not. So, specifically, number one, investment funds and ETFs, which is the most common investment for most people. So if you own an index fund or an ETF, basically, this is the funds that basically amalgamate the whole market. For this type of funds, you'll pay taxes every year based on the increase of the funds, even if you don't sell them. And this affects, according to Saxoman, 80% of the retail investments in Denmark, because again, most people invest through these index funds than buying individual stocks, because it gives you inherent diversification, the fees are cheap. Again, but here we're just taxed big time. But it's not only these type of investments. Pensions in Denmark, when you put money in your pension and the pension increases in value, you still pay 15% of that value increase per year unrealized gains each year. Even if, again, the pension has not sold, even if you are many years down the line from retirement. In most countries, they don't tax the pension while it's in the pot. In Denmark, they do it at 15% each year. Then, of course, this is not it. There are more examples. So there's the Sparekonto, which is this cheaper taxes account, which is like, okay, more tax advantage. In this case, you pay 70% on the gain, but again, it's unrealized. So I have now my Sparekonto, it has gone up a lot the past year, that's great. I will receive a big tax bill on, okay, all this gain that you had, even if you have not sold anything, 70% of that you need to pay us already. And also, just to make the elephant in the room clear, if you pay taxes in Denmark this way, so if you never sold your Apple stock and now you pay taxes on this $5,000 gain, and then the stock tanks and goes down to zero, or you still have to pay the bill and you don't get absolutely any money back. So you're paid, and then if it goes down, okay, bad luck. You already had paid on it, and that's insane, but like, okay, that's the way it's here. Then for housing, it's a little bit different. So this is for financial instruments. For houses, the way Denmark taxes your primary residence is a bit interesting. So instead of taxing the gains of the property when you sell the house, so which in a way could be massive, so you buy this house for 10 million and then you sell it for 15 million, that 5 million it's tax-free gain in Denmark. But that's because Denmark taxes you on the value of the property each year to the tune that it's like, those taxes are pretty high. But again, like in the past 10 years, 15 years, even more, the gains that you get from selling the house tax-free are a lot more than this tax. Why does Denmark taxes in this way? Again, the only country in the world that I'm aware that really enforces this in a systematic way. And there's some solid arguments for this. First is that it gives Denmark a steady tax revenue. Again, by taxing the gains yearly, Denmark gets a predictable, steady stream of tax revenue rather than waiting for people to sell the stocks and then get a gain. So, according to Denmark's statistics, this brings over 20 billion Danish krone annually to the state, and it's pretty big. Then, number two, this prevents the tax deferral, because without this, wealthy people would never sell their investments and they could even pass it on to their heirs and avoid taxes forever. You could even, like in the US, it's very common that you never sell your stocks, it keeps going up, and then you can borrow with your stocks as a collateral, so you basically never pay taxes on the gains. Basically, pretty much else in the world that you could do this, not in Denmark. In Denmark, because you pay the value of the increases each year, you're basically like screwed either way. And this also, number 3, matches the economic reality. The argument Denmark makes here is that if you're getting wealthier, even if it's on paper, even if it's not realized, because again, like, this is funny money until you see it in your pocket, right? So the stock can goes up. I mean, if you bought GameStop and then it goes up to the sky and then it goes down, you know, like still paper money until you actually sell. Again, in Denmark, it still doesn't matter. You pay taxes on the paper wealth that you have, and in the same way that you pay taxes on your salary. When it comes to the housing piece, the setup that you actually then pay this high tax, but then you don't pay tax on the sale, is that this in theory gives housing market stability, because again, this, they say, prevents housing bubbles. I don't believe that, but like, okay, there we go. And because the cost increases gradually rather than hitting up on the sale. Now, there's a dark side to this approach, or you could even say major problems. First one is that for a lot of people, there will be cash flow issues, because you might actually have to sell your investments in order to pay taxes on them, especially in like down years where you're actually having like a tough situation. Imagine having to sell at a loss your investment just to pay the taxes on the gains of last year. So that's pretty tricky. Then it's a very complex system. Like over 70% of Danish investors don't understand how their investments are taxed. I made a full course about investment taxes, and again, it's still like boggles the mind to a lot of people. Then you get double taxation risks, so now that's number 3. If you pay taxes on unrealized gains and then the investment drops, again, you already paid taxes on money you actually never made. Like again, not money you actually made in reality. Again, you can deduct some losses versus other gains, but again, it's not really always a perfect offset, and most of the times you're just, excuse my word, fucked. So that's that. And as a number 4 is that this is very complex to explain to people and banks and so on that don't live in Denmark. So if you need to sell your non-Danish investments in order to pay your Danish investments, it might just be super complicated. And now there's even something more crazy than this, because this is for investments, this is for things that basically will impact a lot of people, but there's something that is even more crazy that impacts just a handful of people. If you are an entrepreneur and you make your company go public, meaning that you make an IPO, you basically start selling shares of your company to the public. Imagine your shares, you sell them for $100, and that's your IPO. You'll need to pay taxes on the paper value of your company, of what you have as owner of the company, at that price, regardless if you sell your own shares or not. So you make your company public, you keep 50% of your company as a person. Even if you don't sell that 50%, you still need to pay taxes on that 50% as an unrealized gain to the Danish skat as a tax resident in Denmark. That has been in the news. There's some entrepreneurs that basically go broke on this, because imagine you need to pay this bill and then your IPO is at $100, but then the company doesn't go well and basically you go bankrupt the company, or the value of the shares goes down to $20, you still owe skat the value of your shares, the tax on the value of your shares at the IPO price of 100, which is, again, if you didn't sell, it's nuts. Again, maybe that's why we don't really have a lot of entrepreneurs in Denmark building a lot of big companies and getting them public here. So now let's look into the bigger impact. So this system overall has some serious consequences. Number 1 is that it drives away entrepreneurs. If you build a successful company in Denmark, as I mentioned, like even if you don't IPO, imagine you build a company and it starts going well, you don't go public, but because you leave Denmark because you want to go somewhere else, you'll need to pay an exit tax on the unrealized gains of your company's value. Again, this means that if you have a company and again you have 50% of shares of a company that's worth 100 million krona, but it's not public yet, it's just what investors value the company. And if you move out of Denmark, Denmark will still tax you the moment you leave Denmark for like that 50% share, like the 42% of that 50% share, which is pretty nuts. And that's why a lot of people, that as soon as they see that their company starts doing relatively well, they're like, okay, we need to get out of here before the tax bill becomes too high. Entrepreneurs, that's why we don't have so many here. Number 2 is that you get lower returns as an investor, because according to my own calculations at least, the same investment will yield in a country that is not Denmark, that doesn't tax unrealized gain, over 30 years will yield 30% less in Denmark than in those other countries, because again, this tax treatment, because you basically pay taxes even if the stock market doesn't come down, because you keep paying taxes and taxes and taxes. That's money you can't reinvest, or it's money you need to take from somewhere else just to pay the taxes on the paper gain. So again, you get lower returns. And again, then the number 3 is that you need to complex plan. So you need to keep your cash reserves to pay these taxes, which means less money working for you in the market. I can explain myself. I'm recording this in January. Last year, my stocks did really well. I just don't know my tax bill until Nordnet and Skat sends me say, hey, sir, this is what you need to pay. But I need to start saving a decent amount of money to just say, okay, this is going to be my tax bill money. And I had to pay interest from January to that, because it's like, oh my God, it's a lot of money. But yeah, at least investments went up. Hopefully they don't go down next year, because if they go down, I don't get anything back. But yeah. So what can you do as an expat in Denmark? Or what can you do as a Dane who is watching this this video. First, use tax advantage accounts. So the actives per conto, while it still taxes you on unrealized gains, it still has a lower rate of 70%. So I would say max actives per conto first. Then if you buy individual stocks, so if you don't buy ETFs, so then you will not be taxed on unrealized gains. So if you think that Nvidia is gonna go to the moon, as some people did, you just buy the Nvidia stock individually and you never sell it, you're good still. Yeah, you don't need to pay unrealized gains. It's only when you buy the index funds, which is again the best for most people, but like, okay. Number 3, plan for your taxes. Again, keep cash aside for this. Like in my case, I'm leaving a substantial amount of cash now in the next few months just to pay these taxes because I know it's coming. While there are quirks on this, think about housing as one way to take advantage of this system. I made a video that will be linked over here saying how to get rich in Denmark, which is basically like buy the biggest house that you can, max your mortgages out, and hope the real estate market goes up, because that's basically the way you can earn really serious money here. So again, that's only for, again, your primary residence. If you start buying more than one property, you'll not good. If you want to learn more about how to optimize your investment in Denmark, you should check these videos up over here, and also check down in the video description. I have a link to my email course on how to invest in Denmark. Which again, even with all this, excuse my word, all this shit, it's still, if you have your money sitting on the couch, and last year it was like 30% increases in the different investments, you'll still be better off investing than not doing it. So thanks for watching, and remember to hit subscribe if you want to hear more about content about managing your life and money in Denmark. Thanks for watching. Peace.